looks very interesting.
Sure. And sir, on the bio side, so if I heard right, you said that we are starting work on Vizag and Mysore, both the sites. That what you said? Earlier we were working only on one side, Mysore side.
You are absolutely right. As Ravi mentioned in his commentary, we have opportunities to produce pharmaceutical grade intermediates and products.
Okay.
That we want to do at
Vizag. Is it fermentation API typically we are saying?
Pardon?
Is it fermentation API that we are talking?
Intermediates and APIs, both. So, why we augmented our strategy to non-pharma products at Laurus Bio and pharmaceutical related fermentation products in Laurus. That is the change change in strategy what we had in the recent past.
So Mysuru will be mostly the food protein side and Vizag will be mostly toward pharma side.
Sure, Jivan, you're right.
Okay. And in that, I have just read one project report which was submitted to the government on the food protein side, Laurus project report, which mentions about 10 different food proteins with total capacity of 1350 ton. So, is it like the long-term plan of the company of getting into 10 different food proteins of 1350 tons of capacity?
Those are the pipeline products. So those are all contract manufacturing. You see, the Laurus Bio is always, except the cell culture ingredients, none of these food proteins are marketed to customers. It is a B2B.
Okay.
Yeah.
Because each of these protein is like very high value proteins. 50 tons is a pretty large capacity.
When it is a food, 50 tons is not a big. It is a small.
Sure. Perfect, sir. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Krishnata from Enam Holdings. Please go ahead.
Yeah, can you hear me? Yeah, I wanted to get the mix for ARV versus non-ARV for Q4 and ARV FDF versus non-ARV FDF for Q4.
In the APIs, in the Q4, out of our 745 crores, 408 crores came from ARVs and 337 crores came from non-ARVs. So you are also seeing that gradual increase in the share of non-ARV APIs and also gradual share increase in the ARV formulations as well.
And what would be the number for the I was asking what will be the entire number for the total ARV share for Q4, including FDF and ARV?
709 crore.
That's about 50% of our sales came from ARVs in the Q4. Both APIs and formulations put together.
Thank you.
From the line of Nitin Agarwal from DAM Capital.
Hi sir, thanks for taking my question. So my question is on, you made a few references to late stage contracts on CDMO. So are you referring to molecules which are already commercial and you would be becoming a second or third source for, for the innovator? That is the kind of contract you're talking about over here?
What I mentioned, 2 products under validation, those are yet to be launched. They are filing NDAs soon.
Okay. But besides that, are you also pursuing opportunities where the molecules are already commercialized and the innovator is looking for a second supply source?
For some intermediates, yes. But those are at the very early stages of progress, I would say. I put it that way.
So if I were to then probably just summarize some of the things that you just said, give us some timelines for when would the meaningful impact of the animal health business contract will start to be visible, when the crop protection contract becomes to start visible?
We can't give you more specific details, but we expect these products and the RFPs what we are receiving will add lot of value for all the stakeholders.
Thank you.
Thank you.
Thank you. Next question is from the line of Vinod K. from Laurus Labs.
Hello. Hello, can you hear me?
Yes, sir.
Okay. Great. Mr. Ravi, first a couple of housekeeping questions. What sort of tax rate do you expect for next year and thereafter? We are now above the corporate tax rate. How do you see this panning out?
I think we shifted to the new regime for the Laurus Labs. So we expect to be around the 25% plus will be the tax rate. But our subsidiaries we haven't adopted and we haven't migrated to the new regime. So maybe we expect in the similar range what we have this year.
Okay. And what's the capex plan for next year?
Sorry?
Capex.
Capex, I think, will be in the similar range of the current year.
And where would that go to?
That goes to the bio and the CDMO.
Okay. The receivable levels as a percent of sales seem to be pretty high this year compared to earlier years. Why is it that, and is it going to remain like that?
Sorry. We are not clear your question. Can you just repeat, Bino?
The consolidated receivables number, debtor days,
Okay.
seems to be higher this year. Why is it, and is it going to stay like that?
No, because of the quarter revenue is higher, the receivables also higher by end of the financial year. But it is based on the quarter revenue, the receivable number will change. So.
Understood. Okay. And finally, could you just help me understand the thought process behind this investment in ImmunoAct? I mean, specifically, what kind of financial analysis did you do? What kind of opportunity that product has, and what sort of ROI are you looking from it?
I think few years back when we have that strategy of investing up to 10% of our profits into disruptive technologies, either in-house or external. When we are explaining this strategy, one of the big fund, actually, they have connected this ImmunoAct team. Then we had a lot of discussions around the world and with a few experts and few oncologists on this treatment, and we found it's very interesting. And that's how we made a first investment of 40 crore. Is it a high-risk investment made few years back when it has not even completed a phase 1 clinical trial? So once the phase 1 clinical trial completed, and then before completing the phase 2 clinical trial, we got an opportunity to invest further. But of course, the valuation has been much higher than the first investment because the phase 2, it is about to complete the phase 2 approval. So now they got the phase 2 approval, and then they already launched in the market. They already serviced almost now today, including the clinical trials, they have completed the 100 patients treated. They're very happy that we could able to contribute through our money. This treatment has come to India. So, and then recently you must have noticed in IIT Mumbai, President of India has dedicated this product to the Indian people. So it's very interesting things going on. They are setting up a large manufacturing facility in the Navi Mumbai. They got a land parcel and they're building on their own. I think it's an interesting things happening there. And then they're also tying up with some other countries, and that's also encouraging. And they're also trying to get in another treatment. They're also they have to conduct a trial. So it looks interesting today, but we don't have any plans to further increase our stake, and they don't require any money more.
Vinod, if you look at the kind of investments what we are doing, for the investments what we made in ImmunoAct, So far, we are only recognizing our share of losses in our balance sheet. And also we invested almost 120 crores. So, but the opportunity is very big. And like that, we are also investing in R&D as well as in the manufacturing assets at IIT Kanpur. These initiatives are putting very, very interesting for long term, but short term, these are very painful investments because we are investing in CapEx, OpEx, and all these are going through the balance sheet. But one has to realize, but your company is putting money in the right places for long term and sustainable growth.
Okay, understood. Thank you.
Thank you. Next question is from the line of Bharat from Bosch. Please go ahead.
Hello. Hi, sir. We have increased our API capacity by more than 50% recently. But if you see this other API segment, last year we have done around 800 crores, and this year we have done around 600 crores. So it's around a decline of around 20%. How do you see this capacity going up 50% and revenue declining by 20%?
The capacity going up is the reactor volume, and most of the reactor volume what we increased is utilizing for the manufacture of clinical phase programs for big pharma. So the capacity increase is not primarily meant for generic APIs. It's majority meant for clinical programs for phase 2, phase 3 and validation batches.
So do you see any pricing pressure in other APIs because there's a decline of 25% in other APIs year over year?
So actually, if you look at the quantum of revenue coming from other APIs is only a quarter of our revenues. That is not the big chunk of our APIs. 50% of API sales comes from ARVs. And then contract manufacturing and onco is another 25%, 30% actually. Maybe 25%, around 25% is contributed to other APIs. So the growth in other APIs or lack of increased margin in other APIs is not going to impact the entire API segment.
Okay. And if you see compare Q3 and Q4, there is no much significant product mix change. In fact, if you see the onco API contribution increased from 7% to 10%. But there's a decline of 450 basis points in the gross margin. May I know the reason for this?
That was primarily driven by the product mix in Q4. If you look at, there is a little growth in our CDMO revenues from Q3 to Q4, but there is significant growth in our ARVs, both APIs and formulation in Q4. So these, and also this is the primary reason for that.
I think if you look at quarter 3, bio and synthesis together 22%. From there now in the quarter 4 it is 18%. So both synthesis and bio are the high gross margin areas. 4% decline is changing the part of it. And second, the finished goods and in process also inventory has come down. So the part of the overheads will be added to the inventory valuation. So that's also is another reason. These are the two reasons. But once the coming years, we are not saying that this will be at the same level, but it can improve once the CDMO revenue share is being increased in overall.
Okay, yeah, thanks. That's very helpful. Yeah, and just for my understanding, just to make sure that I understand right, so the R3 in Mysore is 2 million liter capacity that stays as it is, and then now we are building a new plant in Vizag, and that is also 2 million liter capacity. So in total, it's 4 million liter fermentation capacity. Am I right?
Can you repeat your question?
So in Mysore, the R3 plant in Mysore is 2 million liter capacity, right? And the new plant which we are going to build in Vizag is also 2 million liter capacity, right?
So yeah, this is also actually the fermentation plant we are planning at Vizag will be currently is 500,000 liters only.
Okay. So this is on top of R3 in my tour, right?
Yeah.
So that is still as it is. Okay.
Yes. Yeah.
And my last question is that I understand that management is very bullish in CDMO segment, but if you see the trend of our CDMO revenue for last 3 years, in FY22 we have done around 900 crores, and FY24 we have done again 900 crores. So in last 3 years, it's almost flat with no growth. How do you see it? It's like, can we expect good growth in coming years?
See, if you look at the investments, what we made in animal health plant, we'll see revenues, significant revenues in FY25. Our crop science plant, you will see investments maybe next year, not even this year. And many projects are moving from phase 1, phase 2 to phase 3 are commercial. So I would say this is a transitionary period for the investments what we have done to see significant contributions coming from those initiatives.
Okay. Yeah. That's it from my side.
Thank you.
Thank you. Next question is from the line of Rahul, an individual investor. Please go ahead.
Thank you so much for the opportunity. So, Dr. Satya, in terms of our strategic priorities, beyond the next couple of quarters, can you share your vision for the company's long-term growth trajectory? So that will be my first question.
If you look at the transformation and transition the company underwent in the last 6-7 years, from a pure play API to integrated formulations, then we started investing in bio, then we started investing into animal health, started investing into crop science chemicals, and also cell and gene therapy assets being created. So all these will put the company into a very integrated CDMO player, offering broad segments. And each of these segments has their own gestation. For example, selling enzymes is easier. Crop science is easier. Animal health may have to go through a lot of regulatory pathway. And human health has to go through even more stringent and long regulatory pathway. But all these, we have invested very early into this vendor diversification by the major pharmaceutical companies. So we believe we have created technology platforms and also we have created capacity to capture that opportunity. And we are saying this for the last 3 quarters, but numbers haven't improved significantly. As one of the investor asked, FY20 to FY25 4 revenues were same. It is true. But the clinical development timeline is 7-8 years. If it is very short, it is 5-6 years. And we have projects in different phases of their life cycle. And when we are investing in these initiatives, either we have partner who is willing to work with us, or we have a contract with a partner who is already working with us, or we have conviction that people will come to us, use our capabilities. I think all these will definitely demonstrate you asked a question in leave 1 or 2 quarters, but at some point of time these numbers will come, and all of us who have confidence in the company will definitely benefit from this.
Thank you so much. As a follow-up question, since CDMO is an integral part of the business vision, 5 years out from now, around what percentage do you think CDMO space will be contributing to the overall revenue mix for Laurus? And in your personal humble opinion, are there any Indian peers that you or Laurus Labs looks up to that are doing excellent work in the CDMO division? If you can share your perspective on that, that will be very much appreciated. Thank you so much.
CDMO business used to contribute 20% of revenues in FY20, FY21. 23 was a big jump because of the COVID-related supplies. But again, FY24 is similar to 20%. If you add CDMO of us and the bio, about 20%. We expect in the next couple of years, this should grow to, again, 1/3. That's our belief.
Thank you so much. And any Indian pharma peers that you think are doing great work in the CDMO space that as a company we can pick up best practices from or you look up to?
I think I don't want to comment on your question.
No worries. I understand.
Thank you.
Thank you so much, Dr. Satya.
Thank you.
Next question is from the line of Tushar Mandune from Motilal Oswal Financial Services. Please go ahead.
Yeah, am I audible?
Yes, sir.
So firstly, on this $40 million fermentation capex, so is this considering the contract already in hand, or we are building the facility and then subsequently we'll look for a contract?
It's a mix of both. We are also have certain intermediates planned, and some partners want to use our expertise in fermentation. So it's a combination of internal as well as we make products for our partners.
And so out of this total 700 crore capex which we are just for FY25, how much would be funded from accruals, or will there be further increasing debt?
We don't.
I think, Tushar, we are not trying to increase too much debt. So we will use, our depreciation itself is almost like 380 crores. So I think we will try to manage without increasing a substantial debt, Tushar.
Okay. And the capex which we have invested in date, let's say the 2600 crore, or in particular for the CDMO projects. So effectively the pickup in timeline, because as we have indicated in the presentation as well, that there has been some delay in the pickup of the animal health facility, which has been actually operational from November 23. So effectively, when do we see the meaningful scale up from the investments which we have done on the CDMO facility? Is it like second half FY25, or is it getting pushed to FY26?
In this year, FY25, we'll deliver launch quantities for an animal health NCE program from that site. And we'll be completing validations for around 4 products in this financial year, commercial validations. So we started, or we are going to start commercial supplies from animal health facility this year. Whereas crop science facility will be ready by end of this year, but commercial supplies will come only next year. In the CGT space, we're building vector capacity and then gene therapy products capacity at Kanpur. Maybe we'll have revenues only the next financial year. I hope I answered your question.
Yes, sir. And similarly, also, if you could throw light on the API side investment, because at least in FY23 also, at the industry level, API has witnessed significant erosion in prices, while at least FY23 companies were able to offset that with higher volume throughput. but broadly these APIs are like legacy or old APIs, where the demand would be in the range of, say, 5 to 7%. So will we be able to offset further price erosion in FY25 also, or will we see the pricing headwinds impacting the profitability for FY25?
Don't expect the pricing will be impacted further. And we will give you more details in the coming quarters conference calls. See, we are identifying some areas where we could really add value by making fully integrated products. We'll give you more light in the coming quarters. What are the areas we're focusing in the API space? Yeah.
Okay. Thank you.
Thank you. Next question is from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Thank you so much for your time. I just had one question on the IIT Kanpur link project, which you spoke about, where you said some revenue could start in FY26. Could you give some more detail in terms of how much capex are we doing here, and I mean, who are the clients for these kind of projects? How many products do we have? It's like a slightly new thing. I don't think you mentioned about revenue starting from this part of the business earlier.
We expect some revenues will come next year for vector manufacturing. So capex and opex in the next 3 years could be potentially closer to 300 crores. The next 3 years, capex and opex put together.
Okay. So 300 crores is the capex of the next 3 years?
Capex and opex. I'm not saying only capex. It's both.
Oh, total. Okay. Yeah. So when you say opex, it means like R&D spend for that's where the area of spend is only?
R&D spend will be in the range of 5% only. Yeah, still.
For the company as well, right?
Company, overall company.
I think CGT, what Dr. Satya said, you need to keep in mind that it is assuming that it needs to pass through a clinical trial. Majority cost will be for the clinical trial. So otherwise, if it is not successful, then clinical trial costs will not be incurred.
Okay, you are saying the 300 crore capex or opex which will happen is linked to a clinical trial, which will come in if the project moves ahead successfully in the next few sort of steps.
Yeah.
Okay. All right. Thank you.
Thank you.
Thank you. Next question is from the line of Aniket Singh from Kotak Institutional Equities. Please go ahead.
Hi, thank you for the opportunity. This is Alankar here from Kotak. So just one clarification on gross margins. You made that point on lower contribution from synthesis and bio. But just trying to understand whether higher CMO contribution in the API segment has also led to lower gross margins in this quarter?
The CMO segment in APIs is better than the general APIs, but less than the CDMO. So you're right, that is also a part contributor. Yeah.
Understood, sir. So then, essentially from an overall EBITDA margin standpoint, would it be fair to say that our EBITDA margins can improve meaningfully and go beyond 20% once again, only once this synthesis and bio contribution increases fairly significantly? And of course, I mean, we need to adjust for the slightly higher CMO contribution in this quarter. But more from a directional standpoint, to go beyond 20%, we need CDMO synthesis plus bio to increase meaningfully.
Yeah.
Understood. And maybe one final question, sir. Regarding your discussions with CDMO clients, are these more with existing clients, or has the engagement with potential new clients increased significantly over the past year or so?
Two new clients, but extended more relations with the existing partners.
Sorry, I missed the first bit, sir. You mentioned?
We have added two new clients and extended in the sense increase